All right, everyone, welcome back to the bunker. Today, we're going to talk about a few topics, and this may be one of the most important videos of your trading career. Okay, so I recommend to grab a pen and paper and write down a couple of these things that I will be discussing today. So let's start. Let's start with a question that has been around for a while. Many people don't know how to answer it. They think they've answered it. But let's go over it. And that question is, why do traders lose? Okay? Why do they lose? Is it because they are undisciplined? Do they have an edge? Are they making rash decisions? Do they think that they are smarter than the market? And it's probably a combination of all of those things: not being disciplined, not having a strategy, not sticking to your rules. But I think it comes down to really just one thing, and that is, do you have an edge? Everything else will fall into place. If you have an edge over the market where you, over a large enough sample size, win more than you lose, and your RR is in check, you have an edge. And if you trade that edge like a robot, you're going to make money. That's just the nature of the markets. That's just how mathematically it makes sense. Like, you have an edge over the market, you win more than you lose, you have a positive RR, you're going to win. You're going to beat the markets, you're going to make money. Now, it's not that easy. It's easy to say, but the execution and going over this, it's difficult, because if it was that easy, we would have 95% of traders make money and only 5% lose. But it's the other way around. They say statistics, 5 to 10% of all traders make money long term and 90% lose. Well, why is that? Well, let's explore that a little bit today, and then go over a couple things that will change your mindset and shift your focus to be very rule-based and system-orientated, and take yourself out of the equation as a human, as a decision maker, where it becomes very black and white. Okay? Well, let's just start with what is edge, and define that, which we kind of just did. But there are 4 pillars of edge. Okay, and we're going to go over all 4 of them today. So let's start with pillar number 1. Location. So where are you going to place your trade? You can have different levels. Are we near the EMA? Are we doing it before liquidity grab, after liquidity grab? Pillar 1 is location. Knowing where you are in the market structure, making sure that the location that you are in is the right place, the right time, everything's lining up. That's number 1. Where are we? And am I making the right decisions based on where we are currently in market structure? Okay, location is pillar 1. That's everything. Pillar number 2, execution. Okay? Quantify your criteria, your entry criteria. Okay, this is important. Quantify what you're looking for. Now, it can be as simple as, I see A, I do B, and that's where I'm at. That's where you want to be. You want to be at, this happens, I do this. Okay, it needs to be very black and white. Okay, software familiarity, hesitation, and doubt. This you can work around, and as you get more familiar with your software, like let's say you're using a new chart, right? That will obviously affect your execution. So make sure you know your software intimately. Hesitation and doubt also affects your execution. Okay, you don't want to be hesitant. You don't want to have doubt. These are all things that, if you don't get this right, your execution is going to be out of whack. Okay, that's pillar 2, execution. Pillar 3 is your profit management. Okay, are you looking for specific levels to trade? Do you have set targets? Do you do full pulls or do you scale out? Do you have data backing this up? Why are you getting out of a trade? Is it because you see a candle print that isn't looking the way that you want it to look? Have a set criteria on your profits. It's easy when you have data to back it up, and that comes with time. As you trade and as the years go on, you'll have more and more examples and trade pictures, photos that you should be taking, screenshots, and seeing that is the data part, and that'll definitely help managing your targets. Looking like if you have data that, okay, I get out at the high every single time and it runs another 50 ticks every single time, then maybe you should increase your targets a little bit, right? You're leaving money on the table. So we want to make sure that our profit management is under control and that we have some form of rhyme or reason as to why we're getting out. Don't just get out because you see, okay, we're up $200, I'm just going to take it out. Unless that's your plan. Like, let's say if you want to just scalp $200 over and over again, then that is a solid profit management plan that you can follow, right? But have a plan for your targets, for your profits. When are you getting out? Okay, me personally, I like to scale out. I scale out probably half of my position, and I let the other half ride to my full TP. If you want to do full pulls, that's fine too. Full pulls work really well in having set RR requirements. So let's say you want to trade a strict 1 to 3 RR. Well, your stop could be 50 ticks and your profit could be 150, and you do a full pull every single time, and whatever the market does afterwards, it is out of your control and it is what it is, and you just leave it at that. And that's perfectly fine. Define what kind of a trader you want to be, what makes you emotionally comfortable, and stick with it. Okay, so this is pillar number 3, profit management. Now, the most important one, and you could have maybe guessed it, is risk management. Okay, now risk management also has a few criteria that you have to think about. There are nuances that go into this, and it can really skew your profitability if your risk management is not on point. Okay, so some of the questions that you should be asking yourself is, do you pull your stops down too early? Like, is that something that you consistently see in your trading and something that you do? Do you even have a stop? Do you think you should have a stop? Okay. Do you get out for break even? Do you eat like a bird and shit like an elephant? Answer these questions for yourself and think about what you can be doing differently to improve your risk management, because this right here is everything in your trading. Okay, do you want to pull down your stops too early? Sometimes you do, sometimes you don't. It really depends on what the chart is telling you. You have to read every candle one by one. Do you have a stop? The answer should be yes from all of you. You need to have a stop. This isn't an optional thing. You have one black swan event. The president says something. Some oil refinery blows up in the Middle East, and boom, the market tanks like hundreds and hundreds of points so fast that you can't even blink how quickly your account will be wiped if you trade without a stop. Trading without a stop is completely foolish. You should have an area of invalidation of your trade and where you want to get out at. Okay? Super important to not trade without a stop. Do you get out for break even? This comes back down to an emotional state that you may be in where you are scared to take losses, which is irrational. Well, no, it's fully rational as a human, but it's completely irrational from a money management perspective and from how the markets operate, because you're going to take losses. You're going to take losses no matter what. It's okay to get out for break even. I'm not saying don't do it, but you have to have a reason as to why you're getting out. Okay, and then the last one, do you eat like a bird and shit like an elephant? And this is something that I see traders fall into over and over again. They will scalp little profits like $300, $400, $200, and then take like $1,000 loss and just give away all the money that they just made. Okay, you do not want to be running a negative risk reward strategy unless you're a fucking wizard in the markets and you know you got some 90% win rate, some magic strategy that you have. You want to have a positive RR. Anything less than at minimum a 1 to even a 1.2, not good. A 1-to-1 should be the minimum. This is the absolute minimum that you can run. Do not run a negative risk reward profile, because over the long term you will have losses, and if those losses are bigger than your wins, you're never going to make it. I do know of traders that run a negative RR, yes, and they have made money, but they are uber scalpers and they know what they're doing. They have years of experience. They know the market they're trading. If you're new, trust me, have a positive RR. I personally run a 1.5 to around a 2 RR. So that means for every 1 R that I risk, I take out 1.5 at a minimum, and usually 2 times my risk. So let's say I'm risking $50, okay? Or let's say I'm risking $100, that's even easier instead of 50. For every $100 that I would lose, I make a minimum 150. And ideally for every $100 that I lose, I make $200. Okay? That means if you have a 1-to-2, if you have a 50% win rate, you're making money. You can blindly throw darts at the board with a 1-to-2 RR and you will make money. Okay? And that's really powerful if you combine that with a good strategy that has a 60% win rate, even as high as 70%, which is what I teach in the room. Okay? So these are our 4 pillars of edge: location, execution, profit management, and risk management. Okay? If you have all this figured out, you have edge. You have something there. Okay? This builds this. These are the building blocks to your strategy. If that may be, I'm buying breakouts, I'm trading the 1-3, I'm trading smart money concepts, reversals, whatever. This is your foundation, all these things. And that will lead to profitability. Okay? I want to now touch on something that you guys should write down. And that's the 7 principles of consistency. Okay? It takes a couple of things to be consistent, and these are the ones. Number 1, write this down. This is what you will do, and this will help you immensely. Okay? I objectively identify my edges. Number 2, I predefine the risk of every trade. Number 3, I completely accept the risk, or I am willing to let go of the trade. Okay, what does this mean? This means if you have your stop at 50 ticks and that's your point of invalidation, hold to the 50 ticks. Hold until your point of invalidation. Okay, you have to accept it. If you cannot accept that risk of the initial setup, do not take the setup. Number 4, I act on my edges without reservation or hesitation. Okay, you cannot be scared. You cannot be scared to risk money. If you see the setup, do not let doubt creep in. Just take it. Close your eyes and take it and see what happens. Record the outcome. You now have data. You've now journaled a trade. Positive or negative, it doesn't matter, okay? Act on your edge. Act on your setup. Do not hesitate. Number 5. I pay myself as the market makes money available to me. Okay? I take partials. As I'm in the money, usually 15 points, I take off half. You can take off at 10 points. I highly recommend to scale out of your trades because you never know what will happen next. You don't know. You could be up. The worst is I see traders, they're up 20 points and they want to make 50. They're holding. And you're given all that money back. You're coming back and now you're break even and then you're taking a full 15 or 20 point loss when you had 20 in your hand and you did not take it. So yes, full pulls pay more. Holding the full amount till your target does pay more mathematically. But for your emotional well-being, mentally, take partials. I do it. It served me well. It keeps you sane. It lets you hold the trade to your full TP. Okay? Because you don't know what happens at any given moment. Number 6. This one's important. I continually monitor my susceptibility for making errors. Okay, you're human. You're going to make mistakes. You're not an algorithm. Okay? You're going to make mistakes. Learn from them. Journal them. I highly recommend to have a calendar. Write down your days. Start a notebook. Start an Excel spreadsheet. Whatever. Journal your trades. Take photos. Write down the execution. What you took. What you saw. Why you took it. How you felt. How did you feel when you took that trade? Were you anxious? Were you scared? Were you excited? What emotions came out as soon as you were in the trade? Because there'll be lots. You'll be all over the place. Okay? How did the day before affect today's trades? What happened in your life? Did a girlfriend leave you? Did your pets have an injury that is ruining your day? Is your mood out of whack? Are you eating like crap? Like all these things will fog you mentally and increase your chances of making errors. You might fat finger 4 contracts instead of 1 or 2. You're not in the right headspace, so then you pull your stop down when you're really not. You have no reason to. You get out prematurely. All these things are affected by outside forces. So it's best to come to the markets with a clear mind and being in a good state to trade. Okay, I know not everyone can have that. I know that life sucks and shit hits hard sometimes. But you gotta, when you close your office door or wherever you are, when you're in front of that screen and you want to trade, you need to lock in. You have to forget about the outside world for that 1 hour or 2 hours and not let anything else affect you. And if it does affect you, it is a good idea to take a break and give it 1 or 2 days until your mental and your mind is clear and you can get back into it. Okay? Write down, monitor your trades, monitor yourself, monitor your mind. You know, you need to be your own therapist almost in this game. It's the only way to make it. Okay? Last but not least, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Okay, you gotta stick to them. You gotta follow this through. Okay? These are the 7 principles of consistency. Write them down, look at them, follow them. Okay? Now we're gonna talk about the 5 universal truths of trading. Okay? This is correct no matter what you may think. This is how the markets work, and this is just a state of trading. Stocks, futures, options, crypto, it doesn't matter. These are universal truths, and the markets follow them. Okay? Number one, anything can happen. Like I said, you don't know who's on the other side of your trade. You can be in a trade and it can skyrocket, it can drop, it can just go sideways. You don't know what happens next. Anything can and will happen. That's why we need to stop. Number two, you don't need to know what is going to happen next in order to make money. You don't need to know. You can literally just, you close your eyes, you press buy, you could be up $10,000 on 10 contracts in a matter of 20 minutes by just closing your eyes and just buying at a random point. Did you follow a strategy? No. You got lucky. You don't need to know what happens next to make money. What you need to do is follow the plan. Okay? You can get a chicken to come, and you have two buy buttons and a sell button. Okay, I think I've seen this somewhere before. Maybe it was online on Instagram or TikTok. I don't remember. And you have and you let this chicken trade a contract or two. And every time it pecks, and you maybe put like a little bit of food on the buy and the sell button. Every time it pecks sell or buy, all you do is sell or buy. And the chicken could be right. It could be right for weeks. This thing could be, the chicken could turn a 100K account into, it could double it into 200K. You don't know. Just by randomly pressing buy and sell. Okay? You don't need to know what is going to happen next in order to make money. You really don't. But having an edge where you see a pattern and you notice a pattern, and if this happens, usually this happens. Okay? A results to B. Not always, but 60% of the time. That's all you need, right? Combine that with a 1 to 2 RR, you're done. You got a strategy. You're making money. You're extracting real world dollars out of the markets. Okay? There is a random distribution between wins and losses for any given set of variables that define an edge. Okay? And that comes back to the chicken analogy that I just made. You can win 10 times in a row. You can win 30 times in a row. You can lose 10 times in a row. You can lose 30 times in a row. It's random. There'll be a random distribution of wins and losses in your edge, in your strategy. If you have a 60% win rate, okay, that just means that out of 1,000 trades, you're going to win 600 of them. In what order the 600 appear is completely random. There's no correlation. It doesn't matter. Okay? The individual event, the individual trade has a 60%. So that means that over a long enough and a big enough sample size, over a certain number of trades, your win rate will converge down to 60% if that is the true win rate of your strategy. Okay? It might be 55 as you keep going, or it might be 70 as you keep going, as you will find out. So out of those 1,000 trades, you know 600 are going to win. But you could have 200 losers in a row. You could lose on that setup 200 times in a row, okay, before you see a winning trade. And then you might win 2, and then you'll lose another 100. And then after that, you only got 600 trades left. Now you'll win 600 trades in a row. It's completely random. The likelihood of that happening is near zero, but it can happen. That's why we do Monte Carlo simulations. That's why that term exists, Monte Carlo simulation, because at the casino, I believe it was the roulette table. This was in like the 80s or the 70s. I don't know if it was red or black. It hit like 27 times in a row. And the probabilities of that happening were like 0.000 something crazy percent, okay? That's never happened before, right? There's a random distribution. So take the trades as they come. Okay? In a normal world, you should not, if you have a 60% win rate, out of the 10 trades, you should win 6. That's ideally. It's not, it could be completely random when those, you know, it doesn't really matter when the wins and losses come. You're going to win 60% of the time. So you got to take the setups. Okay? It's unlikely that you're going to go on a 20 streak, losing streak, but it can happen. It's just unlikely to happen. Right? Okay, next. An edge is nothing more than an indication of higher probability of one thing happening over another. This defines your edge. This is what we're talking about with the pillars. It's just scenario A happens 60%. Scenario B happens 40%. With a 1 to 2, for example, let's say RR, risk reward. Okay? You have positive expectancy. You would want to take that. You will take this 60% trade 100% of the time. You will always take that. If you have these odds in Vegas, if you're in Vegas and you're gambling and they gave you, if you're playing blackjack and they gave you fucking odds of a 60% chance to win and you have a positive risk reward of 1 to 2, you'd clean them out so quickly they go bankrupt. Like you'd make millions. You'd hose them. That's the beauty of trading. You're in complete control of your own strategy and your own edge. But it comes down to finding an edge that works. Okay? And I've given you guys a strategy that I use in the Discord where I've gotten payouts. I have the data behind it. Okay? Finally, every moment in the market is unique. Okay? Every moment is unique. Now keep in mind that your potential to experience emotional pain comes from the way you define and interpret the information you're exposed to. And when you adopt these 5 truths, your expectation will always be in line with the psychological realities of the market environment. Okay? If you truly believe in these 5 truths, you'll eliminate your potential to define and interpret market information as either painful or threatening. And you effectively just neutralize the emotional risk of trading. Okay? Anything can happen. You don't need to know what is going to happen next in order to make money. There's a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. And every moment in the market is unique. Okay? These truths should take away any emotion that you have with trading. If you truly believe in these 5 things, you just solved yourself. You unwired your brain. You take the setup. That's all there is to it at that point, right? In addition to these 7 principles, you should also write these down and have them somewhere so you remember. Okay? Now the final thing I want to talk about is trading sins. Okay? And we've all been there. We've all had these days. Revenge trading, over trading leads to an unbalanced mindset. You've been unbalanced. You were thrown off and you're off your game and you blow the accounts. Okay? Imagine this. I'm going to give you a scenario here. And many people have been here. They've been in this situation. I've been in this situation more than once. Okay? You take a trade and you're in it Okay, you have your stops, you have your take profit, and it's hovering around your entry, and you're thinking, maybe I'm gonna get stopped out. Okay, and you pull your stop down or up, whatever, and the market kind of goes in profit a little bit. It comes back, it wicks you out for a small loss, say $300, and it runs away and it hits your TP. And now you're like, damn, those bastards fucking got me. I shouldn't have messed with my stop. So I'm gonna really stick to my rules now, okay? Now and now you've been stunned a little bit shocked, and you're mad at yourself as to why you pulled your stop up, okay? You take another trade, and this time you follow your rules to a T. You hold the full amount. Let's say you're trading two contracts, and you have a 70 tick stop and a 140 tick TP, and maybe an 80 or 100 tick TP for your first target. Okay, and you're in it, and it's looking pretty good. And you tell yourself, okay, I'm gonna follow my rules. I'm not gonna do anything. I'm gonna hold the full amount. Bam, it loses. You eat the full loss, and now you're down another $700. You're down $1,000 on the day in whatever your real accounts, your prop firm accounts, and now you've been stunned. You've been shocked. You're confused. You're like, oh man, I really thought this trade was gonna win. Okay, what do? You want to now make it back. You saw how quickly you could make and lose hundreds and thousands of dollars. So you say to yourself, okay, I'm going to double up. I'm going to take one more contract and take one more setup. Okay. So you wait a bit, you find a setup, you enter, and you say, okay, I had some losses. I'm going to make it back here. We're doubling up. Okay. And the trade quickly runs into profit, and you see the numbers light up on your screen, and now you're up $300, and you quickly close it. You're nervous, you're wrecked, you're like, oh, I'm gonna take this money before it loses again. I just lost twice. You close it, and you make a $200 profit. Okay? And the trade just keeps going. It runs and runs, and had you held to your target, you would have made $2,000. You would have recovered your loss and be up nicely for the day. And as you see this, you just can't believe it. You're completely beside yourself. You're like, what the fuck is happening? Okay. You're like, okay, this is recoverable. I can make this back. I'm gonna get back into this. Okay, this is now your fourth trade. Okay. And you say to yourself, okay, I'm gonna hold this. I'm not gonna play around here. It's gonna hit my TP, and we're gonna make some money. Okay. You enter your fourth trade, you hold it again, another loss. You get stopped out, $500 loss. Let's say you're down $1,500 overall on the day, taking 3 losses, 1 win, and now you're fucked. Now your brain is completely obliterated. Okay, you've been taken to the cleaners. You don't know what's right from left anymore. The demon came out. You're now trading on demon time. You're completely out of any, and you're just at a loss. Your mind is clouded. You're not even in control of your emotions anymore. Okay? And this is the breaking point. This is where you're in that zone of revenge trading. And you might even size up even more, and you're just going to town. You're buying, you're selling, you're trying to do everything you can to make that money back, and you're just eating loss after loss after loss until the account's gone, until you've completely blown the account. And at the point of blowing these accounts, these funded accounts, prop firm evaluations, personal accounts, whatever, you snap back, and a train hits you, time stops, and you're back yourself, and you can't believe it. You think to yourself, what have I done? Why did I blow up? What just happened? It's like I wasn't in control of my own emotions. I wasn't even aware of clicking the trigger, clicking the mouse button, making these trades. You were in a complete frenzy trading. Okay? You're just gambling. You were just gambling at that point. So how do you not let yourself get to that point? Because once you're there, it only takes 2 to 3 losses in a row. Once the market completely fucks you like this, you're already gone. The writing is on the wall. The accounts, before you make, you're down 4 trades, before you make another trade, the account's gone. I can tell for certainty, 100%, the account is gone. Because you've already crossed that line. You've crossed the threshold where you need to stay on this side of mindset of trading, and you've entered the realm of degeneracy and just complete, I don't even have the words for it, you know, but you guys all know what I'm referring to. So how do you get around it? There's only one thing that you can do, and sometimes it takes many losses, blow up after blow up, desperation, and just days crying and being in pain and so much suffering and years of losing money before you finally realize the problem is just you. It's all you. Okay? And you fix it with discipline. That's it. That's all you need. You need discipline. You have to be a robot. This is the only thing that will make you money, that will turn you from a loser into a consistently profitable trader. I'm telling you, I've been doing this for 9, almost 10 years now, in the fucking trenches, battling it out. Discipline will take you so far in trading in all aspects of your life. It helps when your life is disciplined. You have a routine. You go to the gym. You eat clean. You hold yourself accountable. Okay? It's not necessary, but it helps. It helps bring discipline into your trading. You need discipline. I don't know how else to explain it, but if you have rules where you say, okay, I will only take a 1-3 setup, like myself, for example, okay? And I will only take 2 trades a day. And I've made this promise to myself. It doesn't matter if those trades are losers or winners. If I take that second trade and it's a loser, I stop. Okay? And every little lapse that you have where you might take a third trade and you win breaks down your discipline. Okay? It comes down to not winning trades and losing trades. It comes down to, did you follow your plan? Did you have the discipline to follow your plan? Be a man and a woman of your word, and do not deceive yourself. Okay, there's been studies that if you tell yourself, okay, I'm going to get up tomorrow morning at 5 a.m. I'm going to go for a run, and you don't get up and you didn't go for a run, and the next night you come around and you say, okay, now I'm gonna get up and I'm gonna go for a run, and again you do not get up and you do not go for a run. Now it's another night, and once again you tell yourself, okay, this is it. I'm gonna pull my shit together. I'm gonna go for a run tomorrow morning at 6 a.m. or 5 a.m. That alarm beeps and you hit snooze. You've once again cheated yourself. Okay? And you continue to cheat yourself and lie to yourself and disrespect yourself by having these little losses that you keep taking in life. Okay? All that discipline is making a promise and a commitment to yourself and following through on that promise and that commitment day after day. Okay, I don't care if you lie or cheat or do whatever to anyone else or to the outside world. You can pretend to be whoever you want and do whatever you want. But when no one's watching, those dark nights, those early mornings, that afternoon, whatever you told yourself, you have to follow through. That is step one. Okay, and that will carry over into all aspects of your life. It'll make you a better trader. You will start following your plan. You will not move your stop loss if your plan is not to move your stop loss. You will take the partials. You will hold till full TP. 4 losses in a row will not derail you because you now know those 5 universal truths. You now have the 7 principles of consistency to make money in the markets. Okay? This is where it all ends. Like, this is the day that I started following my own advice and things that I always knew is when I started to see changes and results. Okay, and some people can do this very quickly. You know, it takes them 2 months and they're like, yeah, I'm down, I got it, I'm disciplined. Others, it takes years and years of battling to finally realize, okay, I need patience. The market will not go anywhere. Okay? And that's what I've tried to show as well over the last few weeks. You've seen, I think today is the 16th of February 2025, and this trading week I only had a trade on Monday. It was a win. Tuesday, Wednesday, Thursday, nothing. Not a single good setup. Got close to entries, ran away, and that can throw you off. That will derail you. You have to stay strong in those moments. Be patient and be disciplined. Follow the plan. You only trade setups that you know you should be trading. You do not take anything that you don't have data for. You've back tested, you know. Trade your edge. Don't just start trading random shit. And if your edge is not there, just wait. It'll come. It'll be there. The trade will present itself. Okay? That's really all I have for today. I hope this video is going to really help some of you, turn you guys around, and you'll all be Bugs Bunny counting fat stacks of cash. Okay? That's all I got. Take notes. And happy trading. Good luck. I'll catch you guys in the next one. Take care.